Hello again. Welcome to another episode of the Uranium Market Minute. Today is Tuesday, May 10th, and this is episode number 119. My name is Justin Huhn. I am your host. I'm the founder and publisher of the Uranium Insider Pro Newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. As always, nothing that you see or hear on this podcast is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing, and always take responsibility for your own choices. All right, pretty mixed day out there in the markets today. Mixed bag for uranium stocks, some of them green, some of them red, but overall pretty tepid day, not much of a bounce. Had a little bit of a dead cat bounce this morning. That sold off pretty substantially, and then we saw some dip buyers coming back a couple of hours before the close, and most stocks closed right around flat for the day. The ETFs were roughly flat. SPUT took a beating today. However, with uranium spot price falling a couple of dollars, pretty much in line with that previous hefty discount to NAV that we reported yesterday. So we're still at a pretty chunky discount to NAV here. So why don't we go ahead and jump right into the daily scoreboard here. But in the mailbag section, we're going to talk a little bit about some news that just hit today of Cameco and Orano increasing their share in the Cigar Lake mine and some M&A activity. So that's something that I think is very noteworthy and worth discussing. But let's go ahead and jump into the daily scoreboard. We'll run through the charts and then we'll talk about that M&A news. The spot price of uranium down about $2 today. Took a pretty big hit today, 52.13 a pound mid-market. Both the bid and the ask dropping today. We are seeing increasing activity on the spot market. The spot market was relatively quiet the second half of April, actually most of the month of April, especially compared to February and March. But we're starting to see the activity pick up again. That is coming from producers, that is coming from traders, that is coming from utilities. We're seeing some utility activity in the spot market. So multiple entities taking advantage of this risk-off environment across the markets, generally speaking. And obviously that leading to SPUT essentially being hamstrung here, not being able to raise any cash at such a discount to NAV and unable to participate in the spot market purchasing. So the market for the moment is being taken over by these other entities, as it was, last year and previous years before that, where the spot market was mostly involved with traders and utilities. And now we're seeing actually some producer activity as well. Maybe that's Cameco. I'm not really sure, but we do know that there are some producers be active in the spot market currently. So we'll likely see some price kind of chopping around here in the spot market until we get back into that spot market where it's influenced by the financial players. SPUT, of course, did not raise any money, nor did they buy any additional pounds. They're still sitting on 26.5 million. They closed yesterday at an enormous 12.3% discount to their net asset value. That, I think, is as wide as we've seen the discount to NAV for SPUT since inception, since August of last year. Yellowcake PLC out of London, another physical uranium trust, they closed at over a 21% discount to NAV. They've been at a consistent discount to NAV for a while. And so we're just seeing kind of a lack of interest here for the moment. It's relatively quiet. And this discount to NAV for SPUT is huge. Now, on that note, I think it's very interesting that, and very positive that SPUT did not compromise on the idea of redemptions for the vehicle. Now, that's something that they potentially could have compromised on, and it would have possibly led to a greater chance of them being awarded that NYSE listing. And that would be that if they're trading at a discount to NAV, they could sell some pounds into the market, raise cash, buy back shares. And that's something that that UPC actually did in the past. They did that multiple times. Uranium Participation Corporation that was taken over by SPUT. And this obviously would be technically accretive for shareholders, but it would be sort of a death spiral, kind of a flywheel in reverse, them selling pounds back into the market to buy back shares. Obviously that selling pressure would lead to a dropping price. So it would just kind of be a flywheel in the opposite direction. These kind of things could cut both ways, and they do cut both ways with ETFs. But with SPUT, no redemptions. They're just hanging on to their pounds, potentially in perpetuity. And the discount to NAV is, it's just there, and it's going to exist as an arbitrage opportunity for savvy contrarian investors. Obviously, at this point, we're still sitting in kind of a risk-off environment across most markets. So in my opinion, as we see some settling out of the broad market selling off, I think that the CPI numbers reported tomorrow could have an effect on that. We'll see how that comes in. If we see the Fed potentially soften on their rate hikes, I think at least we're looking at another month or two likely of rate hikes, but we'll see. They might turn dovish if the markets keep performing so negatively, but they do have a couple of months, in my opinion, to continue to be hawkish prior to possibly pulling back and allowing a relief rally going into the end of the year, where we have midterm elections across the United States. And obviously the party that is in power currently in the United States, the Democrats, they're not going to want to have a crashing economy, a recession leading into those midterms. And so they're kind of stuck between a rock and a hard place. But all of that is to say, I think when we have the broad market settling out, finding a bottom, I'm not saying that's now. I don't believe it's now, actually. It could be, but I'm not trying to call that. But when we have that settle out and we have a little bit of risk on come back into the markets, and spot might still be at a discount, then we're going to see the arbitrage come back, and we're likely going to see funds flow back in that vehicle and resume what hopefully will be another leg in the uptrend for the uranium market, as we are clearly in a bull market, which is why we're seeing some of this M&A activity that I'm going to talk about in the mailbag section. Okay, ETFs. URA reported 240,000 shares redeemed. URNM did not report any changes in outstanding shares yesterday. However, we do believe they're going to report, because we were hearing they had 75,000 shares in redemptions yesterday, which honestly I expected more. We'll see what URA reports for yesterday tomorrow. It's probably going to be pretty chunky, as we definitely saw, in my opinion, what was some selling that looked like it was coming from the ETFs, because it was across the board and consistent. So 240,000 shares from URA redeemed. That led to 3.5 million in mandated selling. Really not all that much, all things considered. We do have roughly a 2-day delay in that reporting for both vehicles. All right, let's go ahead and take a look at the charts. URA today closed essentially flat, down 0.1% on the day. As you can see, that daily candle opened up about 1.5%, traded up for a couple of hours, traded down sharply as the broad market sold off. The S&P actually closed slightly up, so we underperformed the S&P, and I'm going to show you a chart on that in just a moment. Still hanging out below this Livermore accumulation cylinder, although I suppose you could draw this pretty vaguely. I think at the very least, I still would like to see us remain above that January low, and I think a line in the sand would be this low of 19th of August of last year, where we printed just below $18 for URA. Do I think we trade down to there? No, I don't, but of course anything is possible, especially if we continue to see risk off in the broad markets going forward in the next month or two. Now, this is a really interesting chart that I watch pretty frequently. So this is the performance of URA relative to the S&P. Now, if we, and I've shared this with you before, if we zoom out on this, this is clearly the beginning of a trend after a very, very long period of this underperformance relative to the S&P, right? Considering that URA essentially was conceived right around the time where we had the Fukushima disaster. And so now we're seeing just the first couple of years of an uptrend and a relative outperformance. But if we zoom in on this, we can see that we've got this trend line here that has been consistent over the past couple of years. And if we look at this a little bit more closely on the daily charts, what we're seeing is another couple of bad days, really, in terms of underperformance of the S&P brings us right back down to that trend line. And gun to my head, I think we hit it. So that could be either the S&P is flat and uranium is down. That could be S&P is up and uranium is flat, or just up less. This is just a relative chart in underperformance. And we have nailed this trend line. This started back in November 2020, just before kind of the initial big jump up in the sector. And in my opinion, what was really the beginning of the bull market for uranium was December of 2020, when things really took off. Then this pulled back August of 2021. That was the intra-cycle low for last year. Pulled back again late January, early February. And now it looks like we're heading down to retouch that trend line. So in my opinion, I think we hit that. We're going to keep watching this. I think this is a very interesting chart to see how uranium performs relative to the S&P. And I think for the time being, we are sort of pinned to that broad market weakness. And until we have another catalyst come in for uranium, what could that catalyst be? That could be sanctions news coming from the US, the EU, or from Russia itself. That could be the spot price rising consistently. And of course, that could be a flow of funds returning to spot and returning in the space as a whole. And we could start another leg up. This is a very curious chart. We're going to continue to watch this. And I wanted to point that out. Cameco had an unbelievably bad day yesterday, as we all did. Cameco was down over 12% yesterday. In fact, they were down almost the exact amount that they were down on the day that Fukushima happened. That's how crazy yesterday was in these markets. Of course, Cameco had some added weakness from the selling on Friday from URA. Anytime the ETFs rebalance, it's completely indiscriminate selling. And so if the timing is bad, as it was on Friday, with the total risk off environment, Thursday was nasty. Friday was not quite as bad. We saw some dip buying. Yesterday was terrible across the markets, and Cameco was just thrown out, baby with the bathwater, unjustifiably sold off, in my opinion, as Cameco is likely to be one of, if not the largest beneficiary in this current geopolitical realignment that we are seeing because of the war in the Ukraine. Cameco did trade up over 2% on the day. Volume down a bit. Still yesterday, the past few days, like I said, volume has been up. Is this capitulation volume? Well, possibly not quite there yet, but clearly investors were throwing in the towel later part of last week into yesterday. I think the bulk of this selling, at least this extreme selling, is mostly over. And if we look at the RSI and the levels of the RSI here, let's highlight that previous moments in time. And was that a good buying opportunity? Okay, it's here. Okay, sorry for my scribbling. It's here back in July of 2021. That wasn't the exact bottom. It was close enough. And we go back all the way to the COVID crash, and everybody knows that was the buy anything moment of the decade, probably. And so now we're back at those levels of relative strength. In my opinion, we could go lower. Are we likely to go lower? I don't know. But if you go back to previous levels of the RSI over the past couple of years, then that was clearly a very opportune time to be adding to positions at that point. The Sprott Uranium Trust did trade off heavily today, down almost 5%. But again, with the spot price falling, we're still trading probably, I don't have the exact calculations, probably somewhere around a 10% discount to NAV here. Pretty chunky, right on that 200-day, which has held over the past year and a half. Will it hold here? We'll have to see if the uranium price stays stable. I do think we stay relatively stable in the uranium price. I wouldn't be surprised to see a little bit more downside here. But in my opinion, the arbitrage in SPUT is clear, and I think that investors are aware of it, and we're just waiting for a little bit more of a risk on scenario across all markets. Looking at the relative strength for SPUT, we could see a little bit more downside before we get to extremely oversold conditions here. Either way, this is holding up better than most stocks in the space and is up one of the biggest gainers year to date in the uranium space. All right, so today Cameco and Orano announced that they both have increased their stake in the Cigar Lake mine. They both already were major stakeholders in this mine. And Orano has increased their stake by 3.353%. They now are just over 40% of ownership of the Cigar Lake mine. They paid for that 3.3% with 80 million Canadian. Cameco increased their stake 4.5%. They now have almost 55% ownership in Cigar Lake. Orano and Cameco purchased that stake from Idemitsu. This is a Japanese petroleum company, and this is Idemitsu Resources Canada. They invested in Cigar Lake a very, very long time ago. And in my opinion, what this is showing us is that there is consistent and increasing M&A happening in the sector. We've had substantial M&A happen over the last 12 months. What have we seen? We've seen Encore Energy purchase Azarga's Dewey Burdock and Wyoming, the gas sales projects in Wyoming, increasing their stake in these U.S. Near-term producing assets. We saw Uranium Energy Corporation purchase Uranium One's assets. So now Russia essentially does not own any longer any U.S. assets. That's interesting, the timing on that too. I hadn't really thought about that. That happened, what, 6 months ago? Curious. Either way, that was M&A activity that we saw. We saw Deep Yellow make a bid for Vimy. And now we're seeing Cameco and Orano increase their stake in Cigar Lake. Now, what does this mean, in my opinion, when we start to see M&A activity? That means that the smart players in the space are recognizing the opportunity here, and they're going to take advantage of that. And we're seeing that going further. Cameco and Orano, two huge players in the space. They're both Western companies. Orano essentially state-owned, a French company. They are obviously not publicly traded. They have a stake in Cigar Lake. They have a stake in McArthur River. They have a joint venture with Kazakhstan, the Catco mine. They have multiple projects, other projects in Saskatchewan. They also have projects in Uzbekistan, projects in Mongolia. They are all over the map. And projects in Niger, the Imauren project, that's a difficult one. That's a mouthful. That was one that they were developing back, I believe it was 2014, and they pulled the plug on it due to falling prices. I think they're sniffing around that project again. Either way, very, very smart players in the space. So is Cameco. They know the value of this project. They know the value of Cigar Lake. It's one of the highest grades, if not the highest grade. It's definitely the highest grade currently producing mine in the world. Cameco is scaling down the production of Cigar Lake. They expect to produce 15 million pounds this year, has the nameplate capacity of 18 million pounds a year. They're scaling that down to 13.5 million starting in 2024, while they expect McArthur River to ramp up production to 15 million pounds. Either way, this is a long life asset, very high grades. Orano and Cameco see the value in that. They know what's coming. They know what's coming more than anyone else in the space, okay? So when you see the people, this is something, in my opinion, and I've mentioned this before, in my opinion, this is and has been one of my greatest assets. And I don't know if I would call it a skill, but as an investor, the ability to recognize the people in the space that know the most and to recognize what they are doing and what they're saying and what that means, okay? So Cameco and or Orano are not about to just throw around this cash. They know the value of this asset, and they paid up for it, 185 million Canadian to buy that 7+% stake in this mine. They know that is going to be accretive for each company. They know that's going to be accretive for shareholders. So when you know who knows what's going on in the space, and you can recognize what they are saying, what they are doing, that is a tell. This is a tell. I've mentioned this before. It's important to recognize these tells when you're invested in a space, especially for fundamental reasons. And this is a big tell, in my opinion. So that is very, very good to see. All right. Hope you all are doing well. I will see you again tomorrow. Thank you for watching. I do appreciate the support. Cheers.